Hello, and thank you for your interest in LEG Immobilien. I'm Frank Kopfinger, Head of Investor Relations and Strategy. So, who are we? LEG is the second biggest residential company in Germany with 172,000 apartments and around 500,000 tenants. We are a pure play, so we only focus on residential business only, and we only focus on Germany. Roughly 80% of our assets are in North Rhine-Westphalia, which is the biggest state in Germany, and which represents 22% of GDP. Within residential, our focus is also only on one asset class, which is affordable living. And with this, we have a high social responsibility. Our tenants pay just around €6.90 per square meter, or around 440 euros on average per apartment. 17% of our units in our entire portfolio are rent restricted, and tenants get subsidies from the state as they have either only a little or even no income. We have a reasonable portfolio valuation of €1,656 per square meter and a portfolio yield of 4.9%. The portfolio valuation is well beyond the replacement costs, which should be in the order of 4,000 to 5,000 euro without land per square meter. Based on this valuation, the NTA, net asset value, as we call it, per share stands at almost 131 euro, which represents a discount on the shares of currently more than 40% if we take current share price of 73 euro into account. This certainly reflects the headwinds which we as an industry and we as a company faced from rising interest rates. However, we believe we have well navigated through the crisis. First, we focused our steering on cash and AFFO, which is a proxy for the free cash flow in our sector, and this became our core KPI since 2023. We also put a couple of measures in place to protect and support the cash generation. So, for example, we suspended the dividend in 2022 and based the dividend since then on AFFO and with this on a sustainable level. We sold more than 5,700 units for more than 550 million euro, all of which we deem to be non-core. We offered a scrip dividend for the dividends in 2023 and 2024. And all of those measures add up to 1 billion in cash, which we saved and which helped to protect the balance sheet and allowed us to steer through the crisis without jeopardizing our earnings base as well as our cash generation. Given the capital intensity of the business, we also put our new development pipeline into runoff, and we will finish the last new units by the end of 2025. And all of this helped us to get earnings in 2025 already back to pre-crisis levels based on an FFO I, which is the earnings metric for the sector. And on AFFO, the free cash flow KPI, we even aim for a new record result. Looking forward, the underlying fundamentals remain intact. So the housing situation is driven by a huge imbalance between demand and supply. The number of finished housing in the sector has continuously come down, and the gap further widened as the number of finished units is still declining. And with this, LEG is well positioned within the affordable housing segment, and we expect organic growth drivers to persist. That will come from further market rent dynamics, which will continue and rents continue to grow. We also expect that our restricted units, so the subsidized units, will deliver additional growth in 2026 when the so-called cost rent adjustment for those units will be implemented. And thirdly, in 2028, even 16,000 of subsidized units will get off restriction, and this will allow us to develop rents for those units towards the market level within the regulatory framework. And additionally, we will continue to provide services like energy, craftsmen, and multimedia to our tenants, which allows us to capture additional revenues. And finally, our dividend policy is still based on AFFO, so on the free cash flow. So we pay out 100% of our AFFO, as well as parts of our net proceeds from disposals, once we do disposals from our non-core units. We just narrowed the AFFO guidance for 2025 to 215 to 225 million euros, and this translates into an AFFO increase for 2025 for 10% if we take the midpoint into account. I hope you found this short elevator pitch useful and it caught your interest. Please do not hesitate and contact me or the IR team in case you want to dig deeper into the LEG case. Many thanks and goodbye.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.